Hello and welcome to Blytheway Business News. For this edition, I'm joined by Nigel Robinson, Chief Executive of Central Asia Metals, or as they're sometimes known by their ticker, CAML. Central Asia Metals, listed in London on the AIM market, producing copper from the Kounrad sites in Kazakhstan and also lead and zinc from the SASA Mine in North Macedonia. Nigel, welcome back on the programme. You've just announced a very positive set of interim results. Year-on-year increases in revenue, EBITDA, free cash flow. It's all looking good. Can you talk us through some of the numbers, some of the highlights, please?
Yes, hi there, Tim. Yeah, I'd love to. We've announced some very positive results this morning, and I'm pleased to say that on the back of strong commodity prices, our revenue for the first 6 months of this year increased from 75 million up to $106 million. And the associated EBITDA underlying that has increased from $42.5 million in the comparable period in 2020 up to 64.4 million. That's an increase of 50%. Our EBITDA margin, which is the returns we make of that EBITDA on the revenue, has also increased on the back of these strong commodity prices from 56% up to 61%. And a key metric for us, because obviously we pay dividends out to the market, is what's our free cash flow. And that's increased period on period by 131% from what was 21.1 million in the first half of 2020 up to a number now of $48.9 million. And that strong free cash flow enables us to pay a good dividend back to our shareholders.
Now, the dividend is just one of the many facts that you are well known for, but it is a key differentiator. Let's be honest, there aren't many AIM-listed stocks which pay dividends. Central Asia Metals always had a track record of a long-standing dividend policy, long-standing being a dividend payer. You've announced a dividend today of 8 pence per share. Give us, please, a quick recap on the dividend policy and why you've increased the dividend.
Yeah, as you know, Tim, the dividend policy is based on that free cash flow number I just mentioned, and that was $48 million for the first half of this year. We pay back to our shareholders a range between 30% of that number and 50% of that free cash flow number. And what we're announcing this morning is that we've gone right down the middle there. About 40% of the free cash flow, which is a payment of $19.5 million, or as you rightly say, 8 pence per share, we'll be paying back to the shareholders. So it's in line with what we've done traditionally. It's more generous in absolute terms, in terms of pence per share, primarily on the back of those strong commodity prices I mentioned before.
Paying a dividend, but also paying down debt. Viewers may remember that when you made the SASA acquisition, the lead zinc mine in Macedonia, you actually took on some debt. Now, I think I'm right in saying you've paid now something like 135 million of that debt. You've paid it down. You've accelerated the debt repayments. Where does it leave the debt profile now?
Okay, we've nearly owned the SASA Mine now in North Macedonia for 4 years. We acquired it early November 2017. And at the time, viewers may recall, we paid $402.5 million for that asset, and half of which was debt, around about $200 million. We're now at the half year reporting that we have gross debt outstanding of about $60.9 million. And the announcement this morning is not only of payments back to our shareholders, which, as you rightly say, we have a good track record in, but we're also taking the opportunity with strong cash flows in the business to make an early repayment of some of that corporate debt. So we're repaying early $10 million of that $60.9 million that we currently had outstanding as at 30th of June 2021.
Today, we're pretty much focused on the financial performance, but when you acquired the SASA mine, it is very different to the Kounrad operation in Kazakhstan. It's an underground mine. And I know you've been looking at how you do operate underground. So let's just talk a little bit of mining for a moment, if we can, because you've introduced this cut and fill operation, or you're looking at cut and fill. How's that coming along?
Yeah, it's going along well. Our plans are to introduce the cut and fill method of mining, as you rightly call it, from the back end of next year. So clearly at the moment we're in the program phase, the project phase, whereby we're investing some of our money into capital investment into the required elements to transition to that. We currently still are doing our sub-level caving method of mining for this year and next year, but the progress on the ground has been good. We're investing in a new decline to take us down to the 910 level. Work has started on that a couple of months back, and we're now 200 meters into that decline. and plan to develop that by about 780 metres this year, and that's progressing well. The other works, we've ordered most of the main equipment for the backfill plant and the reticulation, which is effectively the pipe work that will take the waste in a form of paste back underground, and about 40 to 45% of our waste will be managed in that manner. So the plant has been designed. We've ordered a lot of the equipment for it. The reticulation's in place. And also the other aspect of the project is to introduce a form of waste management called dry stack tailings. And that's progressing well. We have the design already, approximately 80% complete for that dry stack filtration plant. And then there's also the conceptual studies from a company called Knight Peasold, and where we can place that on the footprint of the SASA mine. We now have advanced that quite well. We know where we're going to place that those dry stack tailings, and we're now going through the design stage with Knight Peasold to actually look at the costings and actually where we will place it. So all aspects of a quite complicated project are all progressing well to be commissioned in Q4 of 2022, and then introduce this cut and fill mining method from 2023 onwards.
In this day and age, no one can undertake mining without paying due deference now to the environment and sustainability. And Central Asia Metals was a very early move. I mean, I think you've now done 2 ESG reports. So you're well advanced and you're building reputation as being a sustainable miner. As I understand it, you're also now assessing opportunities for reducing greenhouse gas emissions, both at SASA and Kounrad. Give us a bit of detail on that, please, and what else you may be up to.
Yeah, we've been doing quite a bit on sustainability, as you know, and you quite rightly say we've put 2 sustainability reports out now. The latest one in April of this year was to what they call GRI standards. So that's the global reporting standard. And something in parallel we've been looking at very closely with various consultants has been how we can reduce our greenhouse gas emissions. Obviously, it's a very topical issue for governments and companies alike. And we don't intend to come out with aspirational targets. We intend to look at it from a practical point of view and what can we actually deliver on site. One of the key agreements that we've just struck with our supplier of electricity in North Macedonia, it was post the period end, it was around about the 1st of July, we struck the agreement with them, was to acquire 100% renewable energy from them. They're going through a process in North Macedonia with this particular supplier of auditing that process to confirm that it is, green and genuinely renewable energy. But that will effectively reduce our greenhouse gas emissions by around about 35%. And there's other initiatives that we're currently still work in progress that we're looking at Kounrad for both Scope 1 and Scope 2, and further reductions of our CO2 footprint at SASA, what you call Scope 1 footprint. So some of it's still work in progress, but we can announce this morning that we will be reducing it by around about 35% on our CO2 footprint, just from that agreement to get 100% renewable energy at SASA.
There's a lot going on at Central Asia Metals, Nigel, with that kind of financial performance, mining performance, and environmental performance. Before we let you go, a little bit more. What can we expect coming out of Central Asia Metals in the next few months? What should we be looking out for?
Well, obviously, this is a key milestone, the interims at the moment. But at the end of September will be the end of our Q3. We'll be putting out early in October our production update. Within the first week or first 2 weeks of October, that will come out. It's got a few marketing initiatives as the world hopefully recovers slightly from the COVID pandemic. We'll be looking to have some meetings with investors and with the wider investor community. We're going to the Proactive investment show on the 7th of October. We'll be presenting there, and also things like Mines and Money will be presenting there and we've got a booth there in early December. So more of the same, hopefully, Tim. Continue our focus on our production, on maintaining our cost control, generating good returns for the shareholders, and obviously next year we'll be coming out with our full year results around about the end of March.
Nigel, an excellent summary. Congratulations on the results. Thanks for joining us. That was Nigel Robinson, Chief Executive of Central Asia Metals, updating us on the interim results announced today. That's it from Blytheway Business News. Thanks for watching.